Happy morning, people. So, new day, we'll be starting with a new topic, that is IND AS 38, Intangible Assets. Okay, so it's not a new standard to us. In CA Intermediate, we learned the same standard as Accounting Standard 26. Okay, sir, is there any similarity between these two? Yeah, almost majority of the components you learned in AS 26, same thing will get repeated in IND AS 38 also. Some questions may not be, you might have not solved it at inter level. So some extra questions or extra little better questions are framed at CA final level. Okay. All right. And one good thing for you is there is a lot of overlap between IND AS 16 and IND AS 38 with respect to many concepts. So same will get, we'll be able to revise it here also. Okay. So IND AS 38 purely talks about intangible assets. Sir, what does intangible asset mean? Intangible asset means which cannot be seen or touched or felt, right? No, so that is our understanding. That is man ka bhasha, right? Our heart language, right? But standard will not tell all that. Intangible asset means you can't touch or feel or and all. If they put it in gazetted documents, it look very odd, no, sir. So that means there is a definition. For intangible asset, there is a definition. Anybody remember CA Intrica? Same definition here also. Anybody remembers what is intangible asset? Definition? No, forgotten. No. Sir, that road we left long back. Sir, why are you going to the same road now? Yeah, leave that. Yes, no. All right. Sir, intangible asset means 1, it should be identifiable. 2, it should be a non-monetary asset. 3, without a physical substance. Identifiable, non-monetary asset without a physical substance. AS 26 had one more component. It should be held for use. That usage should be either to produce goods or render a service or administrative purpose or rental purpose. That has been cut off in IND AS 38 definition. Okay, so let's go and understand this definition a little better, so that with the help of definition you'll get more clarity over what constitutes an intangible asset. Sir, if you want to call something as an intangible asset, first it should be called, it should be identifiable. It should be identifiable. Sir, if you want to say something is identifiable, you should be able to separate it and sell it. You should be able to separate it and sell it. Sir, give me some of the examples of intangible assets. Some examples of intangible assets. Patent, copyrights, goodwill. Correct? All these softwares, all these are intangible assets ka some example. Okay, suppose I have a software which I have purchased it, let's say by paying 40 lakh rupees. Now, I don't want to sell my whole business. I want to sell only software. Is it possible? I don't want to sell all my business. I just want to sell one asset called software. Is it possible? Yes. That is what identifiability means. Identifiable means if you want to call an intangible asset means if you want to call something as an identifiable, you should be able to separate it and sell that alone. Software, can I sell it alone? Yes. That means is software identifiable? Yes. Patent, can I sell it alone? I don't want to sell my whole business. Can I sell only my patent, copyright, license and all? Yes. Correct. But goodwill. Goodwill. Can I sell it alone? You want ArivuPro? I'll write it on a piece of paper. We have a goodwill of 1 crore rupees. I'll put it on a piece of paper and sign it also for you. You want to buy? Vishwanath, no, macha? Vishwanath, no, Vishwanath, yeah. Vishwanath, you want to buy a macha? I'll write it on a piece of paper, pakka. All the directors will put a stamp on it also and give it to you. 1 crore goodwill. Will anybody buy? No. That means what? Goodwill fails which criteria? Identifiable. That means the first concept is what? If you have any goodwill, that goodwill is not accounted as per IND AS 38. Goodwill is an intangible asset only, but goodwill ka accounting is not as per IND AS 38. When will goodwill come? When will goodwill come? You have studied AS 14. Clue. What is AS 14? AS 14. See, intermediate. Accounting standard 14 talked about amalgamation. No. Correct. No. Purchase method, merger method. We shouted no pa. We wrote some 101 steps, 101 problems. We solved all going na. Okay. Sir, goodwill only will come when you purchase someone's business. Goodwill will only come when you purchase a business. Let's take a small example. Sir, let us say you decided Enough of sitting on the other side. Let us buy this academy. They are talking too much. Oh, let's buy their academy. ArivuPro Academy, you want to buy off. You came to us and say, how much? We told, no da. You tell da, how much? Alright, you are like Seedhi Baat, no bakwash types. Okay. We told, okay, you are not leaving us behind only. We told, okay, 10 laksha. 10 lakh rupees for our academy. Alright. You are a CA, so I mean, you are a CA in the making. Sorry, apologies. Or maybe CA already. In the heart, we will feel we are already CA better. Yeah, anyway, you are just one step away. No, that's all. So not too far. So you are CA. You took ArivuPro ka balance sheet. In balance sheet, what will you find? Assets and liability. ArivuPro has assets worth 9 lakh. We have all the assets, fixed asset, current asset, put together. How much we have? 9 lakh. We have 1 lakh worth the liability. Sir, how much is net assets? How do you get net assets? How do you get assets? Net assets? Assets minus liability. We have assets worth 9 lakh. We have liabilities worth 1 lakh. That means what is net assets of ArivuPro? 8 lakh. Net asset means what, sir? Net asset means net worth of any company. Right? No, any business ka net worth is denoted by their assets and liability. From assets and minus liability you do, if you get something called net asset. That is only worth of a business. So when you checked our balance sheet, the worth is coming to how much? 8 lakh. But how much are we demanding? 10 lakh. You told only 8 lakh worth of net assets. Why are you asking 10? We told get lost. If you want to buy our business, you need to pay 10 lakh. It's a negotiation. Price could be anything. So you told, okay, these guys are also crazy like me. Fine. You told 10 lakh rupees ka check, you gave it to us. That means how much money you paid to buy our business? 10 lakh. But how much is the business ka worth as per our balance sheet? Only 8 lakh. That means for you, loss. How much loss? 2 lakh rupees loss. Because 8 lakh worth of business, you paid how much? You, the purchaser, paid 10 lakh. How much extra you paid to buy ArivuPro ka business? 2 lakh. That extra only. For you, that extra is a profit or it's a loss? Loss. That loss only we refer to as what, sir? Goodwill. This goodwill will come only when you purchase someone's ka business. Okay. And in CA intermediate, mein business purchase, we are counted as per AS 14. In CA final, we have a standard called IND AS 103. We have standard called IND AS 103. So that means indirectly what I'm trying to say, goodwill ka accounting is as per IND AS 103. So whatever goodwill you're going to get, that is not accounted as. It is shown in balance sheet. Goodwill is shown in balance sheet under intangible assets only. But accounting, measurement, disclosure, everything related to goodwill, which standard gives the treatment? IND AS 103. Okay, now people, because for you to apply IND AS 38, intangible assets should be identifiable. When can you say it is identifiable? You should be able to separate it and sell that alone. Goodwill, can we sell it alone? No. That means goodwill will fail which criteria? Identifiable criteria. Hence, can you apply IND AS 38 for goodwill? No. Which standard will apply? IND AS 103. IND AS 103, we will talk about it after 3 weeks or something of that sort. It will come. Big ticket topic. We will study that. So far, these things are clear. Everybody, cool. Ayush, late Latif came da. Come on, time da. Okay. Sir, only 8 minutes late, no sir. Okay. So first one is done. Identifiable. Any doubt online in the first component? No, online. One message podanga. Purinjada. Artha aita. Arthamainda. Yes, sir. Okay. First one is done. First one is identifiable. Second one is what, sir? Non-monetary asset. Non-monetary. You know the meaning of non-monetary already. This is not a new thing to us. Non-monetary means value fluctuate. Monetary assets are those assets whose value is fixed. Non-monetary assets are those assets whose value fluctuate. Sir, if I buy a software by paying 50 lakh today, after 3 months it will be 50 lakh only, or its value may change. It may increase or it may reduce. So for you to call it as an intangible asset, it should be a non-monetary asset. And asset ka definition you already know. Asset means? No. When can you call something as an asset? If you want to call something as an asset, it should be within your control, from which you should get all your future economic benefits. Okay, that same thing will hold good here as well. So any problem in this area or move on to the next? On to the next. What is the third one? Without physical substance. Now your 11th standard or 11th grade ka definition, touch, feel and all that. That they are calling it as what? Without physical substance. This is gadgeted definition of intangible asset. Okay, without a physical substance. I think that is self-explanatory. All right. Okay, let's take a small example. Sir, I purchased a software. That software, no, obviously software will have license keys and all. The vendor told, I will give you that software ka base file, installation file, okay, raw file in a pen drive. In a pen drive. Sir, definition is saying what? Intangible assets are those assets which does not have a physical substance. But when I purchased a software, I got that software in a pen drive. Pen drive is what? It's a physical substance. You can see it, you can touch it, you can feel it. It's a tangible component. But that means, don't you think this is contradictory then? I purchased a software. Software came in a pen drive. Yes. Yes, correct. No. That means, is this contradictory or what is the definition trying to say? Perfect. Sir, when the standard uses the terminology here, without physical substance, what it really means is the value of that physical substance is insignificant or immaterial. Now, let's say I paid 40 lakh rupees for software. I paid 40 lakh rupees for software. That software came to me in what format? In pen drive. I paid 40 lakh rupees for pen drive, tangible element. No, 40 lakh rupees mainly I've paid for what component? The intangible component. That means the value of that pen drive element in this example is material or immaterial? Immaterial. That's what without physical substance means. Without physical substance does not mean there is no physical substance at all. It means the value of that physical substance is very immaterial or insignificant. That's what this means. Done, Aji? So these are the three definition criteria of intangible asset. Doubt? What if the physical substance is next. One step ahead. You just, I'm little slow, nada. Yeah, you just went 1-2 steps. You jumped, nada. I'll come to you. Okay, fine. 1 minute. So far this is okay. All right, sir. Now Skandan's question is, sir, early morning for you. Okay, what if the value of physical substance, it is material? Sir, Skandan is trying to say, sir, I purchased a laptop, sir. I purchased a laptop, sir. Sir, when I purchase my laptop, no, sir, laptops comes with a pre-built software called Windows, sir. I got a software called VLC, sir. So some software was already installed, sir. Now what, sir? I paid 1 lakh rupees to purchase a laptop. Laptop came with some pre-built software. In this case, what to do? Now again, you need to check. That is what is this component trying to say. So if a particular component has both tangible as well as intangible element. If a particular component has both tangible as well as intangible element, okay, then you need to check which is the dominant element. Which is the dominant element. Dominant element means which is of the greater value. All right. If the dominant element is tangible, then the whole component, you don't have to split. If the dominant element is tangible means the entire asset will be accounted as PPE, and which standard will apply? IND AS 16 will apply. Okay. However, if the dominant element is intangible item means then the whole component will be treated as an intangible asset, and which standard will apply? IND AS 38. So in my software and pen drive example, which is the dominant element? Software is a dominant element. So if you pay 40 lakh rupees for this, the entire 40 lakh will be accounted as intangible asset, and which standard will apply? IND AS 38. Now you paid 1 lakh rupees for laptop. So when you paid 1 lakh rupees, which is a dominant element there? You purchased what, sir? Your main intention of paying 1 lakh is to use the software or the tangible element? Tangible element called laptop. So in this laptop plus Windows software wala example, the dominant element is what? PP. That means the whole component will be recorded as IND AS 16. That's what it is. So you don't have to split. You check the dominant element, and accordingly the entire component will be recorded as either PP or it will be accounted as intangible asset. Any doubt in these two sections we have covered so far? I'll share the file. You can make short notes. That's absolutely okay. I mean, I hope you're getting those notes on a regular daily basis. No? Dominant, you'll have to analyze it on a case-to-case basis. Prudence, I mean, a basic common sense, I would say. Right? So when you purchase a laptop, So any common sense would say that the dominant element is a tangible component, like that. Okay, again you'll have to analyze it on a case to case basis. If it is ambiguous, standard is silent, I suggest that you segregate. Okay, segregate. If you're not able to find out which is dominant element, then segregate both. Tangible, you account it as tangible component. Intangible, you account it as intangible component. Carry on. Okay, so this is the definition, and we saw exclusions. We don't have to worry, not much is important. One or two we will remember. Sir, if you have any intangible assets that you are selling in your ordinary course of business, okay, I sell software as part of my business. I develop the software and I sell it to whoever requires it. Then can I treat software as an intangible asset, or it becomes my inventory? Inventory. That's what they're trying to say. If you are selling any intangible asset in the ordinary course of business, then it is inventory. For inventory, we have IND AS 2 that will get applied. Okay. Similarly, goodwill, we already know. Goodwill is accounted as per IND AS 103. Okay. Other things don't need to worry about it. So if you are leasing intangible asset, if you let out intangible asset, for all leased asset, we have IND AS 116, separate standard. You studied as AS 19 in CA intermediate. No, here we have IND AS 116. That standard will get triggered. These are not that important. Others, don't worry, for the time being, it's okay. This much is good enough for our exam for the time being. iPhone joined as a guest star. You kept your name only as iPhone, right? Okay. Great. Move on to the next then. Okay. So this one you already know. If you want to call something as an asset, what, sir? It should be within your control, and from that asset, some future economic benefits should flow to the entity. Now, give me one example which is not an asset, which we have already discussed. Human beings. Human beings are not assets because they are not within somebody's control. Similarly, if you are giving any training to the employees, is employee within your control? No, that means training cost, can you treat it as, if you give any training to your employees to access or to use intangible asset, can you capitalize it? No. The training cost will be transferred to SPL because there is no control. Okay, look at this first question. Okay. Or maybe I can talk about few more things as well. Or maybe first we'll look at the example, then we'll quickly review the question. Few things are not intangible asset. One is training cost on employees. Since employees are not within your control, right? Training cost, if you're giving any training cost to your employees to use an intangible asset, that training cost cannot be capitalized. The training cost straight away will go where? It will go off to SPL account. That is one. We looked at this in IND AS 16 also. Same drama. One more thing is market share. Suppose I say that ArivuPro right now in the South Indian market, we have 30% market share. Let's assume that. I don't know. I'm just saying. All right. Let's say in the South India, we have a presence, we have a market share in the coaching market to the extent of 30%. Right? That 30% market share, can I show it as an intangible asset? We have a market share, right? So that market share, let's say the worth of that market share, if you count our students, let's say it's worth 1 crore rupees. Assumption. Okay. So can I show market share as an intangible asset in my balance sheet worth 1 crore rupees? Possible or not possible? Not possible. Why? One, it is not identifiable. Okay. Or sometimes you could also make an agreement to a non-compete agreements. You can do it and you can sell it. Still you can debate that. But more important factor for this is, sir, is market share within our control. So today you Brahaspatis are studying with us. From tomorrow onwards, if I say jabba, then day after tomorrow you will say tata bye bye. Appa, Devre, I can't bear you. Yes or no? From here you will shift to another academy because at the end of the day you want to clear your examination. So as long as we are doing our job properly, students will study with us. 1 or 2 attempts if we do Goinda, then students also will say Goinda to us. So market share, do we have control or no control? No control. If we have no control, means can you show it as an asset or it's not an asset? It's not an asset. Same goes for customer loyalty also. Not touching your emotional feelings, but still customer loyalty and all, sir, it will not be within your control. Today we are Virat Kohli fans, tomorrow we may become Shubman Gill fans also. Correct, no? Sir, yes, once upon a time there were Tendulkar had huge fans, right? After Tendulkar era came Dhoni's era, now somebody else's. Correct, no? So Customer loyalty will remain same or it may change. It may change again. So that means again customer loyalty is not within entity's control. Hence these components are not intangible asset. So in any question, if you see these things, what will you write? Will you read further or you will simply say not intangible asset? Not intangible asset. That's what is next. First 3 questions. You want to review or homework? No, only one person said. Others are saying first show the question. Then we will see. Yeah, we are auditors. First we want to audit. Yeah, we one review we will give. Okay, Sun Limited has an expertise in consulting business. In the past years, Sun Limited has gained a market share to the extent of 30%. That market share, can you show it as intangible asset? They're asking. Yes or no? No. All this they'll not ask you to justify. At best, it will come as a 1 or 2 marker MCQ question. If at all they ask you to justify, what will be your justification? Why it is not an intangible asset? Because it is not within entity's control. Okay, so hence the answer is what, sir? No, it is not an intangible asset. I'm written one short answer. I'll move forward to the next. Okay, na Saru? Okay, second one. Sir, company XYZ has given some training to its staff on the various new topics like IND AS, GST, blah, blah. So that training cost, they are saying, can be recognized as intangible asset. How much money they have not given? Let's say they spent 10 lakh for training cost. The training cost of 10 lakh, can you capitalize it as intangible asset? No. It straight away goes off where? Whatever amount you have spent, straight away will goes off to SPL. Okay. Pulama, next question. No. Yes, sir. Third one. What is the third one? Here. Maybe this question also we will do. What? Maybe 1 minute. Hang on. I'll maybe come to this question. Remind me this question a little later. I'll come to that. Let us put this on hold. Remember, for tangible assets, for PP, if you want to show it as PP, there was 5 criteria. Anybody remembers what are those 5 criteria? 3 definition to RC. Definition criteria were tangible asset, held for use either to produce goods or under a service or admin purpose or rental purpose. Usage should be for more than 1 period or more than 12 months. Then RC. What are the RC? Feb and cost measurement. Feb as in, because of that PP, entity should get some future economic benefits. And cost of that PP, you should be able to measure it reliably. Here also RC is same. Recognition criteria for intangible asset is also same. What is that? Feb and cost measurement. So meaning, again, if you want to show intangible asset in balance sheet, there are 5 components to be satisfied. If an entity wants to show intangible asset in their balance sheet, 5 components should be satisfied. 3 definition to RC. What is the definition? Tell me once again. 1, it should be identifiable. Second one, it should be a non-monetary asset. Third one, without physical substance. Those are the 3 definition criteria. To RC as in recognition criteria being Feb. Feb as in future economic benefits, and cost measurement, meaning cost of the intangible asset, you should be able to measure it reliably. Done, people? Okay, next one we will see. This one, 4th question, take it as homework. The second part of the 4th, anyway, I'll cover it. So I think it should be okay. This particular second case study, it is there. No? They've given 3 independent case study. This one you already know. Okay, leave that. Second one, by chance, if I don't cover this concept today, you can take this second part as a homework tomorrow. Most probably it'll get covered today. We will see. Anyway, this is a repetitive question, so that's okay. Now we will see. Sir, this one good thing about intangible asset is we can do it little faster because many things are overlapping with IND AS 16. Okay. Measurement of intangible asset. You know this already. I'll go on comparing. IND AS 16 said initially all property, plant and equipment will be measured at cost. Same here also. Initially all intangible assets are measured at no change. Go back to IND AS 16. As per IND AS 16, initial costs are categorized into 3 categories. What are those? Purchase cost. If you have any non-refundable taxes and import duty, add it. If you have any rebates and trade discounts, minus. Then DAC. DAC as in directly attributable cost. Directly attributable cost are those costs which are incurred to make the PP ready to use. Management ready to use or company ready to use. Then we looked at DS. Now use your common sense and tell me what is the cost breakup for intangible asset. Same thing. Initially, all intangible assets are recognized at cost. Cost for this purpose are only categorized into two categories. One is purchase cost. If you have any non-refundable taxes and import duty, add it. Rebates and trade discounts, minus. Then if you have any DAC, DAC ka full form is what? Directly attributable cost. Can you give me some of the examples relating to DAC of intangible asset? If you have any patent or license, you may have to get it registered in your name. So register, unless you register a patent in your name, can you use it? No. To get that license to management intended usable condition, registration fees is compulsory. So that means registration fees is an example of DAC. Then installation charges. If you have any software, if the software is complex, you may have to hire an expert and do the installation, right? Or it could be some customization also. Many people, when they buy their software, they don't use it as it is. They do the customization. Even our ArivuPro app also, we have customized, right? We didn't have few options before. Like earlier, if I remember, we had a 0.75, especially that speed control. No? We had 0.75 and directly 1.75. 0.75, 1 and 1.75. But majority of the students said we want 1.25 and 1.5. That speed control. We feel that is the best suited for our preparation. Then we had to talk to that vendor and get that particular feature also added. Like this. So those customization charges and all, if you have, that also becomes your DAC. Could be even testing charges also. Right now, because sometimes when you have a software, straight away you'll use it, or first you may test it. You might test it out. So even testing charges, if you have, that is also an example of that. Okay, people. All right. Employee cost on self-generated intangible asset. Suppose you are not buying a software, you are developing your own software. Who will develop the software for the company? Employees. That means that employee cost, will you transfer it to SPL? No. You will add it to the cost of what? Intangible asset. Because unless that employee works, can you bring this intangible asset into usable condition? No. To bring the intangible asset into usable condition, we need this employee cost. That's the reason we add. About self-generated intangible asset, I'll cover after 1 hour or so. There is a separate section for it altogether. So these are some of the examples of that. One more component was there in PP. What was that? DSR. Sir, DSR is a repair cost. For intangible asset, will repair cost arise? No. So that's the reason DSR is not there here. But rest everything is pretty much the same. That's all. A repetitive concept in my view. Carry on now. Not going fast, you know. We are able to match up. As everybody, especially in the online, got adjusted to the pace. Okay. That pace, comfortable. You want me to slow down? Because it will take 2-3 days for me also to get adjusted. So I'm just asking you, is the pace okay? Everyone, for this at least responded. Yes, sir. Comfortable, sir. Okay, sir. If anyone is having any issues, please don't hesitate. Okay. You're paid full fees. You have full rights to ask or put up your points. Don't put nonsense points. But anyway, just say. Okay. All right. Sir, these are cost inclusions. These are cost inclusions. Cost exclusions we have learned. It is same as IND AS 16. Tell me, what are the costs that are excluded from the cost of PP we studied? Any general administrative overhead, selling and distribution overheads, relocation cost, reorganization cost, redeployment cost, abnormal loss. Yes, correct. And any sort of promotional expenditure or advertisement expenditure we studied. Yes, no, same drama here also. And you can also bring in one more, incidental operation ka income and expenses. Those things we studied where? In IND AS 16. Same drama here also. Same drama here also. Nana. So that means what is it again? Once again, if you have to call it out, any general administrative overhead is there, excluded. Selling and distribution overhead, exclude. For intangible asset, usually there will not be any relocation cost, but there may be reorganization cost. I may uninstall the software and I may install it again. All right. So those redeployment or reorganization cost is there. That also goes off to SPL. Any abnormal loss by chance, if you are incurring, that also goes off to SPL. And any sort of promotional expenditure, you can call that as opening ceremony cost or advertisement to whatever cost, all that will be going off where? To SPL. Why? Because those advertisement, opening ceremony, promotional cost gives you benefit. Is that benefit only related to intangible asset or it's related to business as a whole? The benefit you get from those expenditure will give the benefit for a business as a whole. Hence, this is not specifically identifiable to intangible asset. Hence, those expenditure we transfer it to SP. Dana, same thing as Ind AS 16. Absolutely no change. Move on. Correct. All right. No. That one question I put it on hold. Remember? Which question is that? Question number 3. Now you tell me this question, sir. Patapat, you should tell. Pluto Limited intends to open a new retail store in a new location in the next few weeks. Okay, that is their problem. Pluto spent a substantial sum of money on a series of television advertisement. So they have given a lot of TV ads to promote this new store. And how much have they spent for this ad? 8 lakh rupees. Okay. 8 lakh rupees they have totally spent for advertisements before 31st March 20x1. 7 lakh of this sum relates to advertisements shown before 31st March 20x1 and 1 lakh was shown in April. So totally for advertisement we spent 8 lakh. And which advertisement is this? Television, no? So obviously when you buy a television slot, the advertisement will get aired or broadcasted on the TV. Out of that 8 lakh of spending amount, 7 lakh worth of advertisement expenditure or advertisement came in which year? March. 1 lakh worth of advertisements was shown in the current year or next year? Next year. You paid total money now only. Okay, it's like coaching fees. You're paid as the money now. Have I given 100% of coaching or am I giving it over 3 months? Giving it over 3 months. So it's like this. Totally you're paid 8 lakh for advertisement. 7 lakh worth of ads are already shown in the TV by which date? By 31st March. Before the current year has ended, 7 lakh worth of ad is already broadcasted. 1 lakh worth of advertisement, is it displayed on the TV in the current year or next year? Next year. But have you already paid the amount? Yes. This is the data. Since 31st March 20x1, company has paid further advertisement cost of 4 lakh. That means totally how much have you spent? As on 31st March 20x1, totally you have spent 8 lakh. In this 8 lakh, 7 lakh worth of advertisement already shown in which year? In 31st March 20x1 itself. And 1 lakh worth of ad is getting projected in the current year or next year? 1 lakh worth of ad is getting shown in the TV only in the next year. Then again next year ended, that is 31st March 20x2, you spent another 4 lakh for advertisement. So totally your spending is how much? 12 lakh rupees over a period of 2 years. That is what is the data they have given so far. Is the data okay to you? Okay, let's see what our accountant Brahaspati wants to do. Pluto Limited Company is of the view that such cost can be carried forward as intangible asset. Company is saying we will capitalize this. We will capitalize this and show this expenditure as a intangible asset in our balance sheet. Since market research indicates that the new store is likely to be highly successful, please explain and justify the treatment. What is it, sir? Advertisement expenditure. Just now we looked at in came. Any advertisement expenditure, any sort of promotional expenditure, will you capitalize it or expense it? Expense it off to SPL. Because no doubt it will give you benefit. No doubt it will give you benefit. But that benefit is not related to ad alone. It is related to whole business. Okay. Sir, how can advertisement be intangible asset? Sir, when you make an ad, that advertisement rights who will own? If you make an advertisement, obviously you will have that advertisement right. Now, Pepsi ka advertisement, can you play? No, Pepsi ka advertisement, who has the rights? Pepsi only. So that advertisement rights, company is saying we will show it as a intangible asset. Is this okay with you so far? But usually these sort of things, no, it's very difficult. When you say you'll get the benefit, right? That benefit is not related to ad alone. When someone buys your product, see, here benefit is what, sir? When you give an ad, if you're confused, now you are a retail store. You are a retail store. You are producing an advertisement. Okay. What is the benefit company will get? If you are a retail store, means you are selling a product. So if a customer buys the product from you, it's a benefit. Correct? No. So if sales happen, it's a benefit. Sir, sales will happen only due to advertisement. Now we also made a poster. We are doing FR batch. Hundreds and thousands of students came. Few people. Yes, no, few people came looking at my face. We'll see this attempt how it goes. Next attempt we will come. Correct or no? That means what? Sales is influenced only by the ad or other factors also. other factors also. What is the price of your product? What is the quality of your product? What is your competitor action? Yes or no? Correct. So benefit is not just from advertisement. Benefit is also influenced by other factors. So hence the benefit is not related to ad alone. It is related to business as a whole. Hence this expenditure you will not capitalize. Rather it will go off where? SPL account. Hope this is clear now, everybody. So the final answer of this question is what, sir? This 8 lakh and this 4 lakh, whatever you have spent, it should be transferred where? SPL account. Okay, G. Yes, G. Hang on. Sir, you will recognize the expense on we do the expense accounting. Obviously, one thing though we got it. 12 lakh ka total expenditure should go where? SPL. Okay. Now the question is, which year you will transfer this expenditure? That also you need to answer. One part of the answer we know that ad expenditure entirely should be transferred to SPL. Now the question is, when? You tell me. 8 lakh rupees, when did I spend? 31st March 20, X1. Sir, do I book the expense in my P&L on a cash basis or accrual basis? Accrual basis. Now here, look at it. Though I spent 8 lakh for advertisement, all the 8 lakh advertisement got broadcasted in that year or only 7 lakh? 7 lakh. That means what? Out of this 8 lakh, I will only recognize what? 7 lakh as an expense in 31st March 20X1. But this 1 lakh rupees expenditure I have already paid. But was advertisement aired? No. That means this 1 lakh in this year you have to show it as what? Prepaid expenditure. And this 1 lakh rupees prepaid expenditure will recognized as an expenditure in the next year. That's what also you need to call it. That is what they've done over here. Okay. Out of this 8 lakh, you need to give it a call over here. One, this advertisement expenditure, you cannot capitalize as intangible asset. You should recognize it as an expense. Again, all this they will not ask as an individual question, people. So don't waste too much of your time in worrying about how to structure the answer. At best, it may be for a MCQ suited. If at all by chance, if they ask you this and all as a 3-marker question, thank every god that you know. Okay. Doubtful, sir. Such easy questions and all. Doubtful. That too for this 2-marker MCQ question. Maybe. Doubtful. That also doubtful. But possibility, you never know your vastu. Okay. First point you will write is these advertisement expenditure should be recognized as an expense. It cannot be capitalized as an intangible asset. Second one, you need to write expense is recognized on a payment basis or accrual basis. Accrual basis. That is one. Then you will write what? Out of 8 lakh expenditure incurred in 31st March 20X1, only 7 lakh will be recognized as an expense. Balance 1 lakh, you have to recognize it as a prepaid expenditure. Okay. And then 4 lakh expenditure, you will recognize current year or next year? Next year itself. That 1 or 2, 3 points you need to put it across, if at all it comes. Any more help is required or move on to the next one? Easy peasy so far. Nothing much new in my view. You also feel so? Or Sunday's feeling has kicked in? Sunday, what Sunday, sir? Ever since we have come to the CA course, no, there is no Sunday, there is no Ugadi, there is no Pongal, there is no Eid, nothing. Either we will be studying or we'll be having exams. So, yes, no. Alright. Luckily, that one good move, that shifting the examination day, at least some people now are able to at least celebrate Diwali, and probably I think Ramzan also comes in that period only, I believe. No? Some period, huh? Pongal also comes. So some festivals, luckily ICAI has spared us. We'll be able to celebrate. Especially the main, in fact, one disadvantage, even my attempt was in November only. The biggest drawback of writing the exams in November is everybody will be enjoying, especially that cracker. Other festival is still okay because people will celebrate inside their home. But this Ganesh Chaturthi and Diwali when it comes to, very, very irritating. Yeah, because everybody will be on the road only, literally. And we have to study in our rooms with all that cracker sound, noise, geese. I think majority of Indian festival people are on the road only. No? Yeah, first half a day maybe inside the house, then on the road only. Dumtaka only. Okay, anyway, so luckily ICAI is spared. But it's a good move in my view. 3 attempts for a final. I think it makes sense. Because ICAI is playing that volume game. When, in fact, all the subjects ka syllabus, they have increased it. So when you have increased the syllabus so much, I think liberty should be given to the students also to write it. Because some students may not be able to handle that pressure of writing both the groups. So this way, I think now many students will plan, especially we have seen it at inter level now. Ever since this 3 attempts ka drama has come in, no? 90% of the students don't want to write both the groups. They'll be like, no, I'll write aram se. Why? I'll write this anyway, 3 months, one more will come. No, I will write aram se. Okay, but they don't know that actually clearing one group is more difficult than clearing both the group. Inter-student, no, that experience is not there. Yeah, only one attempt when they write, they'll get to know that there is something, an amazing benefit called set-off. And many people clear because of that set-off. But yes, I always suggest writing both the groups. But anyway, still that you still have a good option. But keep all that in the last 6 months ka strategy. For now, when you're writing, your mindset, let it be like, once I will write and I will get the degree. Keep that as an attitude. Okay, it's possible. Okay, see, it's just the option that makes us think. If option is not given, you will never think. Like when you are 4th standard or 10th standard and all. Some of you wrote your CBSE, ICAI and all. There you had 10 papers, 11, 7, 10. How many subjects was there? 11 to 12 subjects. Or at least 6 was there, no? Correct. At least 6 was there. There, did they give you option? 3 you write now. After 6 months, write 3 more. Did they tell you? No. You wrote, no. Correct. All the 6 you wrote. Correct. Because that option was not there at all. You prepared. But now option is given. 3 you write now. Other 3 you can write whenever you want. Now you will start, your mind will start playing tricks. Okay, this time, no, it's okay. I'll skip. Okay. Hey, I wanted to study for 3 months, but ultimately I'm only able to study for 1 month. So one group I will skip. So the option is what making us revisit. But option will always come at a price, people. Do not forget that. Time value of money ka concept, do not forget. One attempt if you are delaying, even 3 months delay will cost you 2.5 lakh rupees. On an average, CA ka salary now is 70 to 80,000 per month. So 3 months if you are delaying your examination, plus 1 month for result to interview and all that. So 4 months salary, gone. So 3.5 lakh rupees, gone. If you are ready to sacrifice 3.5 lakh rupees, go ahead and push your attempt. If you want that 3.5 lakh rupees, with that 3.5 lakh rupees, you can buy 3 iPhones or maybe I don't know what will happen, right? But anyway, at least one though will come. If you are an iPhone fanatic, or you can go for that whatever place that you want to travel. Okay, so it will come at a cost. So I personally feel always exam and all, I always of the belief that once you should write and get out of it. It's not like our temple or our house or our girlfriend or boyfriend house, which we would like to visit often. No, exam and all is a center which we would like to visit only once and then get out. We don't want to do this activity again and again because it's pressurous. So why are you doing it? Karma khanda. Yeah, I'm in this profession, so I have to do it. Yeah. So, but for you, when there is a clear choice of writing it once, please write it once and get on. Much easier. Okay, aim for it. I think it's possible, people. Don't freak out saying that it's not possible from my end and all. Keep the confidence high. It is possible. Every person has the potential to score a rank. Okay, it is just that don't think that rank holder have extra horns or they're extra smart or they have extra kidney and all. Nothing. It is just the number of times of revision. Okay, I can say this because even I've got a rank. All right, fine. So it is not a big deal. Okay, it is just that the number of times of revision you'll have to increase it. As long as you do that, you will get it. If at all you're aiming for it. But either ways, we'll come back to next question. Let's not go further. Question number 4. I think I told it as homework already. No? This is done. No. Next concept is what? Is deferred consideration. Sir, you know this. Tell me. Today my job is good. I can go on asking your questions to you. Deferred consideration. What is this deferred consideration? We acquired deferred cost, same concept, like we should not add transfer to parent and pay. I say, hey, I told him, like, hey, you pick whatever you want. I told everything, whatever I knew. Correct. Deferred consideration simply means you have purchased an intangible asset, but are you paying the amount right now or are you delaying the payment? Delaying the payment. Is this a new concept to us or we have already learned? Already learned. Vomito. Not literally, just through words. Tell me. Deferred consideration concept. In deferred consideration, what do we do? PP or intangible asset is always recorded at CPE. CP as in cash price equivalent. The difference between transaction price and cash price equivalent is time value of money ka interest charges or finance charges which goes off to SPL. Ditto concept of Ind AS 16. Absolutely no change. Yes, people? Okay. This one is also same homework, same cost. This deferred consideration question we will review. Okay, this is a question, people. This is a solution, people. It's just an example in study material. I've copy pasted. DAC ka example. What is the cost inclusion? What is the cost? exclusions. Okay, review this. Question number 5. I'll keep this question number 5 as an LDR, last day revision. Let's see what we can learn from this question. Venus India Private Limited acquired a software for its internal use costing 10 lakh. Okay. The amount payable for the software is 6 lakh immediately. Sir, what is the value of the software? 10 lakh. Totally you need to pay out or pay 10 lakh. In that 10 lakh, 6 lakh you are paid immediately. 4 lakh you will pay in 1 year's time. So now you tell me, sir, will anybody give a 1 year's credit for you? No. If you are delaying the payment by 1 year, do you think the other party, the vendor, will he charge the right amount of money, or there will be some interest included? There will be some interest included. So that we have to find out. They will not give. I mean, this 10 lakh rupees, 10 laksha rupees is present value or future value? Future value. How do you find cash price equivalent? Cash price equivalent means today's value. Okay, if you purchase this PP on a normal credit basis, if you purchase this intangible asset or PP under a normal credit basis, what would have been the price? Sometimes they will give you that price. If they don't give, how do you find CP? If they don't give you, find out the present value of future cash flows. Okay, now 6 lakh ka should I have to find out present value, or I've paid immediately? Immediately. So this is already on which terms? Present value terms. But this 4 lakh rupees I've paid now or after 1 year? After 1 year. That means this 4 lakh is what? Future value. I have to take the help of a discount factor and find a present value. Check the data here. They've given discount factor to be how much? 10% rupees. Done. I'll read off this data. Then they've given you other expenditure. Other than this purchase cost, we also have some other cost. Purchase tax. Sir, tax can I add? I can add, provided I cannot claim it back. ITC should not be available. Okay, it should be a non-refundable tax. Sir, if they don't give any information, always assume that the tax is non-refundable. If they don't give any information, then you always add it. Just a convention, no logic. Because ICAI solutions, majority of the solutions are framed in keeping that as an assumption. I suggest follow the same for exam. Then we have one more tax called entry tax. But in bracket mein what they told? Recoverable later from the tax department. So now you are paying it, later you are recovering it. So this is what, sir? These are refundable taxes. Add or ignore? Ignore. Okay. Legal fees can we add? Yes, it's a software, no? Maybe we mean to get it registered. I don't know how is legal fees associated with software. Maybe they should have modified this a little bit. Okay. If it is patent and all, I could have understood. So maybe some registration charges. But anyway, let's kind of pardon our mother body. Legal fees also directly we will say it is associated with the software. So that means it becomes an example of what, sir? DAC. Consultancy fees for software ka implementation. Yes, unless you pay this, can you bring the software to usable condition? No. I mean, is this also DAC? Yes. Can we add it? Yes. So these are the things we can add. So the only crux of this question is finding cash price equivalent. I'll solve or we will review. What is it? Review. Whatever. Okay. Only funda is this calculation of cash price equivalent. How do you calculate cash price equivalent? Have they given first of all cash price equivalent? Now you have delayed the payment of software by 1 year. Have they told if you purchase under normal credit, 7 lakh is the price, 6 lakh rupees is the price, like that given or no information? If they don't give the information, we have to find out cash price equivalent. And how do we get cash price equivalent? Cash price equivalent is nothing but present value of FCF. FCF as in future cash flows, or maybe I'll write full. Just find out the present value of future cash flows. That only you will get it as cash price equivalent. Here, how much totally are you paying for purchase cost? Purchasing it. 2 payments. One 6 lakh, another one 4 lakh. So we just have to find out the present value of these 2 payments. Is it okay? Is it fine if I review it like this? Comfortable? No? Nothing much different here. I'm not lazy. I'm asking you. If you're totally comfortable, we will review it. If you need help, I will put it up. I feel simple questions we can review to save some time. That's the only intention. Okay, fine. I'm not getting a response from online. So I'm thinking online is busy copying, or they're saying it's okay, macha, you do it. Okay. So how do you calculate it? 2 payments. What are the 2 payments? 6 lakh and 4 lakh. 6 lakh ka payment when are you making? Immediately. Immediately means year 1 ka beginning. That year 1 ka beginning only we call it as year 0. Then discount factor. Do you know discount factor? Yes. The discount factor is nothing but cost of capital given how much? 10%. So at 10% for year 0, the discount factor is always 1. So 6 lakh into 1 if you do, you'll get the present value to be 6 lakh itself. Then another payment towards purchase cost you paid when? End of first year to the extent of 4 lakh. Find out the discount factor. At 10% for 1 year, what is the discount factor? 1 divided by 1 point I whole power n. That's how you get the discount factor. So 1 divided by 1.1 if you do 0.909. This is a discount factor. So multiply these two, you will get the present value. Adding these two, you will get the total present value of cash flows. That only we call it as cash price equivalent. Yes, people. Or if you feel, no sir, this table putting and all is a waste of time, directly you can do. What is that? Here we can show 6 lakh is already on what platform? Present value platform. So directly you can write 6 lakh into 1, which is how much? 6 lakh. Another payment you made when? 4 lakh at the end of first year. So first year ka discount factor you multiply, you will get the same answer. So this is faster. I would recommend this to be followed in examination. If you feel, no, this is, I'm not comfortable, then put up the table like the way you used to put it up earlier. Whichever way. Done now. Now, can I record intangible asset at 963,600 or this is only purchase cost? This is purchase cost expressed on present value terms. Is that the only cost we have or we have other cost also? Other cost also that we have already identified. So that means next is a main statement showing the carrying amount or the cost of intangible asset. First, we will take what cost? Purchase cost. Expressed on what terminology? Present value term. That only we call it as cash price equivalent. How much did we get it to be? 963,600. Okay. Then other cost. What other cost we have? Purchase tax. Any information about refundable, non-refundable? No information. So we are assuming it as what? Non-refundable. So can we add this purchase tax? Yes. So add 1 lakh rupees. Then entry tax, they told we can recover. So we will add or we will ignore? Ignore. Legal fees and consultancy fees for implementation, can we add? Yes. 87 and 120 also you can add. Adding all, you will get 12,70,600. That is the cost of intangible assets. Initially, you will recognize intangible asset in your books at this particular value. That's all. Easy question only, but just that they've asked CP along with other costs. Hence, I made this question as an LDR. Again, all these are also most probably 2-marker ka MCQ question. Or bigger question, they will bring this as an adjustment. That is also a possibility. How ICAI wants to ask, their choice, their headache. Wait, or any updation you want to do it from your end? Or carry on? Online, all cool? All cool? Okay, so this is done. This one is over. Next question. What is next? Okay, the intangible asset acquired as part of business combination. This, I think more about this we will talk about in IND AS 103 only. Leave this. One we already know. One intangible asset that comes due to business combination. Business combination means business purchase. Business purchase. In CA intermediate, we used to call this as amalgamation. Here we call it as fancy. IND AS is international standard, no? So instead of saying business purchase or amalgamation, they're calling it as business combination. Okay. So what to do if you have any intangible assets acquired as part of business combination? In IND AS 103, I will cover that. Okay. But one you already know, that is goodwill. How do you get goodwill? Tell me the working once again. Compare the amount paid. To purchase the business, you will pay some money, no? That only we call it as purchase consideration. So how much money you paid to purchase the business, that PC, you compare it with what, sir? You compare it with net assets. That balancing figure. Net asset is a net worth of a business. If you paid more than the worth, then the purchasing company has made a loss. That loss only we call it as goodwill. Sir, what if it's other way around? Profit? Then it's a capital reserve. In IND AS terminology, we call it as bargain purchase gain. Leave that. That we will take care of it in IND AS 103 later. Not required for the time. Okay, people. All right. Move on to the next. Oh, it came here only. Awesome. Next, business combination. Great. Okay. Okay. This, okay. Maybe this one also I'll keep it as an LDR. All these are simple question. Once I go to IND AS 103, these will be pretty straightforward ones. But okay, for the time being, we can keep this as an LDR. That's fine. Okay, so let's see what we can learn from question number 6, people. On 31st March 20X1, Earth Limited paid 50 lakh rupees for 100% interest in Sun. Earth has acquired 100% control in which company? Sun Limited. Okay, now? Alright. Sir, this 50 lakh rupees only is what we refer to as. Obviously, can we say now Earth has purchased the business of Sun? Correct. And to purchase this business, how much money Earth paid? 50 lakh. That only we call it as purchase consideration. For class purpose, it is simply, we'll denote it as PC. On that particular date, Sun Limited, the selling company, their net assets had how much fair value? 30 lakh rupees. Should we have to calculate net assets or given? Given. So the fair value of net assets on that particular day when you purchased the business was how much? 30 lakh. 30 lakh was the net assets, but how much money did the purchasing company pay? 50 lakh. That means they have paid what? Extra. Extra means for a purchasing company, it will be a loss. That loss only we call it as goodwill. Okay, stop there. Read this line. In addition, meaning other than this 30 lakh, in addition to this 30 lakh, Sun Limited also had the following rights. They also had the few extra things. One, they had a trademark named Grand, valued at 1,80,000 using discounted cash flow technique. That means, is this 30 lakh the only net assets, or other than 30 lakh, few extra are there? Few extra assets are there. One extra asset is what, sir? A trademark as an intangible asset called, and the trademark name is Grand. Okay. And how much is that value of that trademark? 1,80,000. Okay. Trademark also you can sell it. Okay. The logos and all you can sell. They also have a value. So how much is the value of this particular intangible asset? 1,80,000. Should we ignore this for goodwill calculation or consider? Consider. Because this 50 lakh rupees, check this. This 50 lakh rupees we paid only for these net assets or even for this trademark? The purchasing company paid 50 lakh not for only these net assets. They also paid for trademark also. So when you're comparing PC with net assets, both has to be on the same platform. Okay, now. So should we ignore this for goodwill calculation or consider? Consider. That is one. And they also have a sole distribution rights to an electronic product. They have a sole distribution rights. So only they can distribute that product, maybe in a particular state or a particular region. The future cash flows from that particular right is estimated to be 1,50,000 per annum. For the how many years? 6 years. So that means because of that right, we will get how much benefit every year? 1,50,000. For how many years we will get this benefit? 6 years. So that means you tell me, Earth has paid 50 lakh rupees only for this net assets or also considering this distribution rights? Because the selling company has this distribution rights, they would have paid 50 lakh rupees money. Yes or no? That means, should we ignore this distribution rights for our goodwill calculation or consider? Consider this also. Done now. But this trademark value is straight away given. How much is it? 180. Okay. It's a value today. But this distribution rights, what is the value? You are getting 1,50,000 per annum. For how many years? 6 years. That means totally how much are you going to get? 1,50,000 into 6 is how much? 9 lakh. But 9 lakh is today's value or value over 6 years? Value over 6 years. We are doing a business combination or we did the business purchase after 6 years or now? That means, can I take 9 lakh rupees? No, 9 lakh rupees is what value? Future value. We need to find out what? The present value. Okay, now. Fine. That's for that. For finding present value, we need a discount factor. How much is the discount factor? 10%. Done, people? That's all. And for 6 years, 10% annuity factor is given to be 4.36. We will see what is this. Calculate the goodwill and other intangible assets arising on account of business. On acquisition means business purchase. Alright, maybe this one I've solved, I think here only. But anyways, no problem. Once again, I'll quickly review this off. Question number 6. Okay. First one, sir, we'll put up one working note. Sir, we have only 30 lakh net assets or 2 more? In addition to 30 lakh, we have 2 more assets. One is your brand. Brand mein, is there any valuation drama or given? Given. But what about this distribution rights ka valuation? Given or missing? Missing. That means we need to find out. That is also one-liner answer, but anyways, I can show it to you. Okay. So one, I'm trying to find out sole distribution rights ka value. This is an intangible asset. Sir, how much benefit are you getting from the sole distribution rights every year? 1,50,000. For how many years are you going to get? 6 years. That means you have. So totally, if you do 150 into 6, you will get 9 lakh. But that 9 lakh is on what platform? Future value platform. We need a value after 6 years or now? Now, how do we have to find out present value? How to find out present value? year cash flow, and we'll take discount factor. What is the discount factor here? 10%, and then we'll get present value of cash flows. So how many years are you getting the benefit, sir? 6 years. How much benefit you're getting every year? Same, 1,50,000, 1,50,000. Don't do this in exam. I'm just showing this in case you've forgotten. Okay, we used to use one more shortcut method, PVAF. If you remember FM and all, we have done this. Okay, but some of you would have forgotten, so I'm showing you this calculation once again. Okay, so tell me, sir, at 10%, what is the discount factor for every year? 1 divided by 1.10. So first one you'll get it as 0.9090. I think here they give how many decimals? 2 decimals. So we'll stick to 2 decimals. 0.90. 0.91. Nah? Okay, he's rounding off and telling. Okay, no problem. 0.91. Next, 0.8264. So I'll take it as 0.83. Then it is 0.7513, I think. So 0.75. 0.6804. So then 0.6203 something you'll get. No? Then 0.57 is 6th year ka discount factor. 57 only? 56? 57. 56. So these are your discount factor at 2 decimals. If you go on doing 1 divided by 1.1 and press equals to button, you'll get this. Yes, no? Correct, no? I hope no one has forgotten the discount factor calculation. Anybody needs any help in that? If you are having any problem, please don't hesitate, people. I know that sometimes what will happen is, when we come to that final level, no, sometimes we hesitate to ask the doubt. Oh, I am already at final level. Can I ask this, or should I know this? At the end of the day, people, exam is important. Okay, doesn't matter what level you are. If you have any doubt, that doubt may be irrelevant or simple or stupid for others. But if it is a doubt, it's a doubt for you. If it is important for you, it is important for me as well. You can ask. So don't have that complexion issues. Whatever you have, you tell it. It's okay, nothing. No problem with that. If I know, I will answer. Otherwise, okay. You can do something else for that. Okay. So now multiply these two, sir. What is the answer? 150 into 0.91 is how much? 1,36,500. Quickly do it. Next one is how much? These two come multiplication. 124,500. These two come multiplication. 1,12,500. 1,02,000. 93,000 dot. Okay, next. 84,000. Add all this for me. One of you add this for me. One of you add this for me. Discount factor and present value of cash flow. Both addition I need. One of you keep doing that and tell me. 6,46,500. This discount factor addition will give me some 4 point. They've given that. So we 4.35. Okay. This only they've given in the question to be 4.36. Sir, either you can calculate the present value of cash flows like this. Okay. But instead of doing all this drama, this is a wastage of time, in my view. Why? It's simple mathematics. If you just check, every year is cash flow changing or same? Same. Which is the only component changing? Discount factor. So instead of doing all this, no sir, you simply do what? Take your cash flows and multiply PVAF. Take your cash flows every year. What is the cash flow per annum? 1,50,000. Multiply present value. PVAF means present value annuity factor. Annuity factor means adding all the discount factor. Adding all the discount factor, what are you getting? 4.35. So multiply now. 1,50,000 into 4.35 you do. How much are you getting? Obviously, you will get 6,46,500. Same answer, you will get it in one line. That's all it is. Okay. So I suggest you follow this in examination. This and all we have done it. In AS 19, we have done. In FMA, many topics we have done this. Yes, no, everybody. But this one you can use, or maybe once more I'll tell. Sir, each year ka discount factor if you take. Each year ka discount factor if you take, that we call it as PVIF. PVIF means present value interest factor. Present value interest factor. If you combine, okay, no problem. 1 minute. So if you combine multiple years ka discount factor, if you total multiple years ka discount factor, we call it as PVAF. PVAF for present value annuity factor. Okay. So if the cash flows are same every year, you can use the shortcut method only under one circumstance. What is that? The shortcut method only works when cash flow every year is same. If cash flow every year is same, means simply multiply by the PVAF factor. Now what is it for? Total number on this number. 6,46,000. This is not 656, 646. This is a 652,500. Here also it is same. 652,500. That is okay. That is just calculator early morning. No, sometimes different calculators will give different numbers. That is okay. Okay, so are we comfortable with this? So that's it. So that means which one will we follow for our examination? This one. That is what ICAI has done over here. Simply they have taken check what 1,50,000 and multiplied 4.36 and they've got 6,54,000. So it becomes a one-liner solution for that. They have taken 4.36, hence they've taken. And moreover, people, when they give you a particular PVAF, that means you should not, ideally you should not do this particular approach in this exam, in this question. Why? Because this is PVIF. But did they give you PVIF in the question or specifically they gave PVAF? When PVAF is given, you will have to use that shortcut method only and get the answer. But otherwise, if there is any round off error, no, you lose marks. Because they have given you the data. If there is no data, then if you round off or take 2 decimals, 3 or 4 decimal, it is fine. But when they give you, you should take the exact one. So in this problem, we compulsory will use this. Now let's calculate the goodwill. That's what they asked. Calculation of goodwill. Tell me, sir, how do you calculate goodwill? First you will take purchase consideration. Maybe first problem will write full. Purchase consideration. This only we call it as PC. How much is PC we paid? To buy 100% stake, we paid 50 lakh rupees. Now PC we'll have to compare it with what? Net assets. Now IND AS says we have to take fair value of net assets on the date of control. Date of control, we'll call it as a DOC. Okay, date of control means, sir, to get control in one company, how much stake we should have minimum? To get control in one company, we should have more than 50% stake. Here we have purchased how much stake? 100%. With 100%, we have obviously got control. Okay. All right. What IND AS, sir, goodwill ka calculation is as per IND AS 38 or IND AS 103? IND AS 103. IND AS 103 says on the date of control, you should take fair value of all the net assets, not book value. You should take a fair value. Common sense. I have paid 50 lakh rupees means, suppose you want to buy ArivuPro means, now ArivuPro ka valuation will be done based on net assets. Will you take book value of net assets or market value? Suppose ArivuPro owns a land. We purchase that land for 10 lakh. Okay. But the market value of that land is 1 crore today. We had purchased the land 5 years back and the value is how much? No, 5 years back when I had purchased, I had paid only 10 lakh. But after 5 years, that is today, its value is 1 crore. Now you tell me, if you buy our business, that land, I will sell it to you for 10 lakh or 1 crore? 1 crore. That means PC, no sir, you will pay PC based on book value or market value? Market value. Hence, IND AS 103 says, always you should take fair value of net assets for goodwill calculation. All this again will come. It's an IND AS 103 concept. Since they have asked little small things, I'm saying. Fine now people. Because since this particular value is based on market value, net assets also should be based on market value. Otherwise, comparison will be wrong. Done. Okay, so we need this. And they have already given net assets. What is the net assets they have given in the question? The fair value of net assets given is 30 lakhs. Sir, is this the only net assets we have or we have few more? In addition to this 30 lakh, this particular company had two more assets. What are those? A trademark called Grand and a sole distribution rights. For this trademark, we have to find out the value or they only given. The trademark valuation is already done and they've got it to be how much? 1,80,000. That's all or one more? One more called what? Sole distribution rights. Sole distribution ka rights ka value they had given? No. They had given the value on a future value terminology. We found out the present value. What is the present value of that? Here, don't take this. This is 4.35. Should we take 4.35 or they've given it as 4.36? They have given the PVAF to be 4.36. So in your calculation, do it over here. So how much is the benefit you are getting every year? 1,50,000. So cash flow changing every year or same? Same. This is your cash flow per annum. For this, we need to multiply what? PVAF. What is the PVAF at 10% for 6 years? Given in the question, 4.36. So multiply and tell me how much? 6,54,000. 6,54,000. That means what is the total net assets, sir? Can you tell me? Adding all this, you'll get total net assets. How much is that? 38 lakh. 34,000 is the total value of net assets. Fine. So that means the value, the worth of that business is only 38 lakh 34,000. But the purchasing company paid how much? 50 lakhs. So purchasing company made a profit or they made loss? Since purchasing company paid extra, they made a loss. That loss only we call it as what, sir? Goodwill. So this goodwill is as per which standard? This goodwill is as per Ind AS 38 or Ind AS 103? It is as per Ind AS 103. So these took a subtraction you do. 11 lakh 66,000 is the value of your good. That's all they asked in this question. That means these two working note, you don't have to do it in this problem at all. Directly you can start with this calculation. Because it's a straightforward one. No, that's the reason. That's what they've done in the solution also over here.
Where the business on the year ending, right?
Don't know, sir. Yeah, here actually given. Year ending, correct.
If it's the beginning of the year, 1,50,000 will be taking as a present value, like into one.
No, they will give you. It's not about when the date of acquisition. Okay, see, on the day you purchase business, you see this particular trademark. You can use it for how many more years, and based on that, you will find out the present. Now, maybe in your question, if this instead of 31st March, if it was 1st April 20x0, then trademark you can use it not for 6 years but for 7 years. So instead of 6, in that case, it will become 7. That's all it is. So date of acquisition becomes irrelevant in this particular case. So instead of 4.36 PVAF, the PVAF will change because this is 6 years ka PVAF. In that case, you will take it as
not considering for next year, right? For this year, we are not considering.
This year. So it's always, sir. See, you are talking about when you're doing a valuation, right? Valuation, if they don't give, it's always present value of future cash flows. So future cash flows ka present value you find, and that is the value. Whichever day you can find out the present value, date value, doesn't matter. So in your question, if this was 1st April, in my view, in that case, trademark is available for use for 7 years. So you will get the benefit over 7 years terminology, find out. On that particular day, you will find the value of trademark on 1st April 20x0 in that particular case. Valid question. Hope this is clear. Anything else or carry on? Carry on, pakka na. Easy peasy, no, nothing else, I think. Okay, first few concepts, first few things in the standard is very straightforward. Nothing much dumb at all here. Okay, so you're wondering about break, or is it okay if I do a few more? I think I can do a few more concepts and then I can consider a break is what I am thinking. You also agree with me? Unfortunately, you have to know. Yeah. Sheshagari is saying, I'll not agree with you. Give me a break. Wait much. I'll finish off another 10 minutes. 10-15 minutes I will do, and then we will give it. So that I'll at least just plan. Hang on. Yeah. I think till here at least we can do. After break, we can take up this. Fine. Okay. 2 more concepts at least we'll cover. Okay. Acquisition by the way of government grant. Now, what is this concept is? Sir, we have not purchased intangible asset. We have got intangible asset as a grant from the government. So, government is so Dharala Prabhu Karna. They gave intangible asset to us. They gave intangible asset to us, that too at free of cost. That too at free of cost. Let us say, okay, a software, I've just given a small example. So, one software is there whose market value is how much, sir? 1 crore. Government gave it for free to A Limited. Why? Even governments have some initiatives. If you fall under that initiative, you may get some such incentives from the government. So here what has happened? A Limited has received software worth 1 crore rupees from the government by paying any money or free of cost. Free of cost. Now the software is an intangible asset. Correct? No? Intangible assets ka accounting is as per Ind AS 38. Okay. But did you buy this or you got it as a grant? Got it as a grant. In this case, what to do? Okay. This is backed by Ind AS 20 and Ind AS 38, government grant ka standard. Both says the same thing. More about this we'll cover in other standard. For the time being, I'll only talk about the necessary pointers. Sir, if this scenario plays out or if this scenario happens, entity has 2 options. Entity has a 2 choice of accounting and they are free to do whatever they want. One, both. In fact, we have studied this in AS 12 also. Anybody remembers? Accounting standard 12 government grant we studied in CA intermediate. If you receive any grant, if you receive any asset at free of cost, we will record that asset at nominal value is what accounting standard 12 told. And I told you nominal value, you can take it as 1 rupee, 10 rupee, 100 rupee. That is just for the sake of disclosure. That is one option. That is option number one. So if you receive any intangible asset at free of cost, then entity will record that particular intangible asset at nominal value. Nominal value could be 100 or 10 or 1000 or depending on what. This is just for the sake of disclosure. Yes, people. So record that intangible asset at nominal value. Option number one. Or option number two is, what is the fair value of this software? 1 crore. You can record that intangible asset at fair values. Either you can record that intangible asset at nominal value, or you can record that intangible asset at fair value. Entity has a choice what accounting they want to follow. One of the two they are free to follow. Now let's do the accounting for this just to be on the safer side. Okay. So let's look at the journal entry for both. Second, actually there is no journal entry, but if at all you want to pass, we can pass one. So let's go over the scenario once again. A Limited received the software worth how much? 1 crore. From whom? Government at free of cost. What are the two options? Tell me once again. One, nominal value, or fair value or market value. So A Limited has two options. First, let's say they want to go for fair value option. They want to go for fair value option. Tell me the entry, sir. Let's see. At least one portion of the entry you can complete. Intangible asset, that is software account, will be debited at 1 crore. Because if you are using fair value option, means software will be debited at 1 crore rupees. Okay, now you have to credit something. Can I credit bank? Did we pay the money? No. So this 1 crore, you will book it in something called deferred government grant account. Okay. This is a current, or usually it will be shown, this deferred government grant account will come in your balance sheet under non-current liability worth 1 crore rupees. Sir, why non-current liability? What is this? It's very simple. Sir, if you show software at 1 crore, can you show the software at 1 crore throughout? No. At some point, at every year, if you're booking an intangible asset, you also need to amortize. Let us say you are amortizing the software over useful life of 5 years. Assumption. It could be anything. I'm assumed it to be 5 years. That means when you get the government grant, you will show software at 1 crore. And along with software, you will also show a liability called deferred government grant account worth 1 crore. Yes, people. Then over 5 years, this 1 crore ka software will get amortized and get transferred to SPL. Okay. Same way, this deferred government grant also, from deferred government grant account, it will be transferred to SPL. It will be transferred to SPL as an income. Okay, it will be transferred to SPL as an income. Over how many years? Over the useful life of 5 years. Same thing. So on the expense side, you will go on getting amortization. On the income side, you will go on getting some deferred government grant. That way, the net impact in SPL is same or zero. This is that. So when you account it, on the asset side, you will show software worth 1 crore. On the liability side, you will show deferred government grant worth 1 crore. Both will anyway get nullified. More about this accounting, this deferred government grant getting transferred to SPL, we will study in government grant wala IND AS. There is a standard for that. There we will cover. But I hope this part is clear for you, everybody. Yes, sir. This is one option where what, sir? Company has gone for which option? Fair value option. Is that the only option? There is one more. One more. What is that one more? Nominal value. In nominal value, the company will recognize software at nominal value. That could be 100 rupees, 1000 rupees, or 1 rupee. And instead of deferred government grant, directly you can credit SPL. It's fine. Okay. It's anyway nominal value. It is only for the sake of disclosure. Okay. You can simply write to SPL directly, 100 or 10 or 1 or whatever. Whatever is the nominal value the company wants to adopt to show it. This is the way of accounting for intangible asset received as government grant. Okay. This is a repetitive concept. It will come in India's government grant ka standard also later on. That's it, sir. I'll give you a minute. In case you have any doubt, you can ask. If you want to update anything, you can do so.
Nominal value take as 10 lakhs.
No, sir. Nominal value, no, sir. Usually, nominal value approach is basically just for the sake of disclosure. Okay. So nominal value will be easily 1 rupee, 10 rupee, depending on the size of the company. Okay. You will not take 10 lakh and all, because 10 lakh seems to be a material amount. So usually in these cases, practically they'll take 1, 10, whatever, small amount. That's all. Just to make sure that we show that asset in balance sheet, we record it at nominal value. So we don't amortize and all, we just show it. Then finally, after a useful life, we just remove that. Okay. Okay, just simple, just for the sake of showing. Sir, how will it be shown in SPL as a deferred government grant? Okay, someone is saying, sir, deferred government grant account, how it will go to SPL? I didn't understand, sir. Okay, anyways, we will cover this in IND AS 20 later on. But anyway, since you have asked, 1 minute, I will tell you. Now, government has given you software worth 1 crore. For this, maybe since you have asked 5 minutes extra, I have to jadify. Okay, na? Is it fine with you? Can you listen? I'll just give you a correlation point if you remember. Accounting standard 12, not CA final, CA inter. Sorry, we left that road. Hey, pitch. AS 12 said, okay, if you received grants in the nature of promoter's contribution. Perfect. If you receive any grant which are in the nature of promoter's contribution, you show the grant in your balance sheet under capital reserve. If it's an income related grant, you will show it in your P&L. That is what accounting standard 12 said. Capital grants, you show it in your capital reserve. Income related grants or revenue related grants, you show it in your P&L. Yes, yes, no. IND AS 20 says nothing doing. Every grant should be transferred to P&L. Every grant should be transferred to P&L. Because when government give grant, no, they don't give you the grant like that. They'll put some conditions. And to fulfill the condition, you have to incur some cost. And that cost or expense, where it will go? SPL. Hence, IND AS 20 says, using matching concept, since the cost is going to SPL, let this grant also go to SPL. Okay, now? Fine. But the only question in IND AS is whether the grant should be transferred to SPL today or over a period of time. Okay. Whether should you transfer this grant of 1 crore to P&L today or over a period of time. Fine. Now check. What did you receive as grant? You received cash as grant, or you received software as a grant? You did not receive cash as a grant. You received what as a grant? Software as a grant. And the software will last in your business for how many years in my example? 5 years. Now use your common sense. This grant is related to software now. Software, you're booking amortization charges. You're amortizing it fully in first year only, or you're amortizing over 5 years. Means this grant is coming with this amortization expense. That amortization expense is lasting for how many years? 5 years. So grant also you'll transfer to SPL over matching concept. That's all it is. Understood now, Amma? So when you receive the grant, you pass this journal entry, and at the end of each year, from deferred government grant account, you transfer it to SPL. So the transfer entry will be what? Tell me. Here you have credited deferred government grant. To transfer it to SPL, what entry will pass? Deferred government grant account debit to SPL. So you will transfer this over how many years? 5 years. So year 1, 2, 3, 4 and 5. How much? 20 lakh. So 1 crore you will amortize over 5 years. It will be how much? 20 lakh, 20 lakh. I know this is all you will go on doing. Okay, actually, you have to transfer this to grant to SPL in the amortization ratio. In the amortization ratio. Usually for intangible asset, amortization will be on a straight line basis. So grant also will go to SPL. Same grant will be transferred to SPL over the same 20 lakh, all the years for over a period of 5 years. Anything else? Anyway, this don't worry about this one. This is a good standard. We have more than 20-25 questions on this standard, where we'll be doing a lot of this. Entry, journal entry, P&L impact, balance sheet impact, everything we have to study. But this and all is there in your module 3. So it will come after 2 months. Okay. So till then we'll have to wait, but it will come. Just that it is time being come, so I'm quickly reviewing what is necessary for us to cover IND AS 38. Anything else online? Everything okay, sir? Just the break part if you tell, hey, wait. Okay. Now, next one. Sir. Here, software you might have received it at free of cost. Okay. Software, just because they received it free of cost, should the company start using it immediately, or there may be some DACs? There may be some DAC, DAC. What is the full DAC full form? Directly attributable cost. Tell me some of the examples of DAC related to software. There could be some installation charges or customization charges. So what do you do for DAC? DAC you will transfer it to SPL. DAC, if you have like registration charges, customization charges, installation charges, that you will add it, capitalize. That concept is still the same. Just because you have received the government grant doesn't mean that DAC you can ignore. DAC you will always capitalize. That's a common concept. That's what third point is trying to say over here. Okay, I've just summarized it for you in one line there. Move forward. Okay, next, again, repetitive concept called exchange. Let's test our memory. Exchange is a new concept or we know? Old concept we studied in India 16. Exchange means what, sir? One non-monetary asset is coming in, another non-monetary asset is going out. Okay, so basically one here in the intangible asset scenario, give me an example for exchange. Give me an example. Perfect. We have purchased a software by giving away car. We have purchased a license by giving away building. Like this, both are what? Land, building. Building is also non-monetary item. License software is also non-monetary. That you are purchasing an intangible asset, but not by paying cash entirely, but by giving some other non-monetary asset. That scenario only we call it as exchange. Tell me, sir, I told you a few things related to exchange. Tell me. Perfect. As a thumb rule, whenever exchange happens, we have to use fair value. But fair value is not required under two circumstances. What are those? Perfect. If the fair value is not determinable, you don't have to use fair value. Or if the transaction lacks commercial substance, in that case also we will not use fair value. Sir, when can you say transaction lacks commercial substance? Asset-wise cash flow, entity-wise cash flow, same. Meaning, due to this transaction, cash flow will not change. Due to this exchange, if cash flow does not change, we call it as transaction lacking commercial substance. Sir, if you are not using fair value or if transaction lacks commercial substance, will we touch fair value? No. We will use what? When we use book value, will any gain or loss come in or no gain or loss will arise? Due to this exchange, gain or loss will not arise. Only if you use fair value, you may end up getting some gain or loss on exchange. That gain or loss on exchange will go to where? It will be transferred to SPL. Same fund, I've just written it once more for you here. Ditto concept, absolutely no change. Now we have one question based on this. One good question on exchange. They have kept it in this particular standard. So we will solve that and then we will take a break. You need any updation to be done from your end on this or comfortable? Done. Next question, can we see? Okay. Question number 7. Let's review this question. Sun Limited acquired a software from Earth. Okay. In exchange for telecommunication license. So from Sun perspective, if you are analyzing, you will take a note. Okay. It's same as IND AS 16, no change there. Maybe I'll try to do a thing. I'll try to share this file before class only for you. So that maybe if in case you want, you can refer it right there. In case that helps, or is it okay if I do it after the class? After the class is okay? Okay. So what plans today? No articleship. So what plans? Huh? Studies. Oh my God. When only no? When I is saying I have become studious now. When is your attempt? September. Okay, makes sense. Others are not answering. That means they have plans. They don't want to disclose. Like why for you da? You do your job and go da? They're telling. Makes sense. Huh? You will roam. Yeah. May 27 is a Sheshagiri ka attempt. Now it is May 25, 2 years before. Okay, good start, ma. Good start, right? Anyway, that's a good choice because FR and AFM is a syllabus where there'll be no changes. So it's a good thing, but just make sure that you revise it. Okay, it's a good time around say. But DT, IDT and all, take it as late as possible. Or don't start early because there will be some amendments in that. Of course, you know this, but just say. Someone was up. For me, September 27. September 2. Oh, okay. So you Ramya is like, I have 2.5 years. That means immediately after clearing CA intermediate, you guys have joined for coaching, articleship and coaching simultaneously. Good. Okay. So early, they say no, early bird gets the worm types. Okay, so it's okay. Early start is always better. Sir, my attempt is in May 25, sir. No, May 25 over, no da. You mean May 26? Okay. Sir, what if my attempt is in September, January and all? It's okay. Try to cover as much as possible. All right. If you feel it's not workable, if you're not able to finish the syllabus, then write only one group. That's all I would suggest. But don't skip your attempt. Give it a shot. Okay. Even if you have 2 or 3 months also, still fine. Give it a shot. Let's try our best. Anyway, it's counted as an attempt. So why to leave it? Right now, that way. Copying done. Done. Next, question number 7. Okay, Pakla. Sun Limited acquired a software from Earth in exchange for license. So what is coming in for Sun? Software is coming in. What is going out? License. That means we acquired software by giving away cash on another non-monetary asset. Software is an example of non-monetary asset. Even license is an example of non-monetary asset. One non-monetary asset is coming in, another non-monetary asset is going out. This scenario only we refer to as exchange. Okay, that license is carried at 5 lakh. Carried in books means this is what, sir? Fair value or carrying amount? The carrying amount of license is 5 lakh in the books of Sun. The software ka carrying amount is 10,000 in the books of Earth. They have given both. Okay, fine. Advise the journal entries in the following situation in the books of Sun and Earth. That's the reason. Good question. I'll keep this as an LDR. So you need to pass the journal entry in the books of both the parties. So through this particular question, we'll be able to understand the exchange provisions fully. They've given 3 different cases. Okay, these are 3 independent cases. One by one, we will review that. I'll solve this. In fact, I've written this for you here. In fact, simple one only. But anyways, I will solve this question just to be on the safer side. This is question number 7. So they asked the journal entry for both Sun as well as Sun, and the other one is Earth. Sun Limited, Earth Limited. Sir, the first thing before journal entry is somewhere in the rough way, you just check what is coming in and what is going out. Okay. For Sun Limited, what is coming in? Sun Limited acquired software. So software as an asset is coming into the business. And what, sir? In exchange for telecommunication license. So Sun acquired software by giving away what? License. So what is going out for Sun? Sun only or Earth only? Correct, Sun only. Okay, license is going out. Is my statement right? Software is coming in, license is going out. Done, 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 done. Okay, first I'll do a thing. Instead of confusing ourselves, we'll complete the journal entry completely for Earth, for the Sun Limited, and then we will do the same exercise for Earth. So it becomes a repetitive things for us. Okay, first case we will take. Okay, now people stop. Now you tell me, looking at this transaction, do you think transaction lacks commercial substance? Transaction lacking commercial substance means cash flow should not change. Cash flow should not change. Now, sir, earlier Sun was using what? License. Now they gave this license, they acquired what? Software. Sir, is software and license same? Is using the software and using a license same or different? Different. I mean, this is a case where transaction lacks commercial substance or transaction has commercial substance. Transaction, of course, in this particular case has commercial substance. Okay, now. All right. Now, we'll read the first scenario. Fair value of software is 520. Fair value of license is 5 lakh. So, fair value is missing or given? Fair value is given. Okay. Normally, again, I'll tell you the provision. Whenever you do exchange transaction, as a thumb rule, we have to use fair. Fair value should not be used under 2 circumstances. One, the fair value of the asset coming in and the fair value of the asset going out. Both you cannot find out. Or transaction lacks commercial substance. Here, fair value is missing or given? Given. And transaction lacks or has commercial substance? It has commercial substance. So, we have to ignore fair value or consider. Consider. So, first we will do the journal entry. So, both are assets. Both are real account. Real account rule is debit what comes in, credit what goes out. What is coming in? Software. So, in the first case, the entry the Sun will pass is software. You don't have to copy. You can tick in the solution also. If you want to copy also, fine. Okay. Your choice. So, software you will debit. What will you credit? Leave one line. Why am I leaving one line? In exam also do like this only. Leave one line and do it. Because due to, if you are using fair value means you will end up getting some gain or end up getting some loss. That we will put it as balancing figure. We don't know. So software we will debit. What went out? License went out. So license we will credit. Done. So if license has gone out means can we show that license in our books anymore or cancel? Cancellation will always be done at fair value or carrying amount. Carrying amount. The asset is just going out. We need to cancel. Check, sir. What is the license ka carrying amount? License is carried in our books at 5 lakh in the books of Sun. That means license you will credit at what value? 5 lakh. This is the first answer. First portion. Comfortable? Now software we have to debit. The asset coming in we have to debit. Since the fair value is determinable and transaction has commercial substance, the asset which is coming in compulsorily we have to debit at what value? Fair. Okay. Now the only question is which asset ka fair value you have to use. IND AS again tells the same thing. You can use fair value of the asset coming in or fair value of the asset going out, whichever you can find out more clearly. That's what IND AS says. But practically as well as for our examination, we will always prioritize our assets. In this, what is our asset which we gave up? License. That means we will always prioritize what? Fair value of the asset going out or fair value of the asset given up. What did we give up? License. That means, do you know license ka fair value? Yes, license ka fair value is given to be how much? 5 lakh rupees. That means software we will debit at what value? Software we will debit at 5 lakh rupees. Check. Is the journal entry, any difference is there or it's matching? Matching. That means in this case, there is any gain or loss or no gain or loss? No gain or loss. This is the first case. Can I move on to the second case? Sir, if we don't pay exam fees, it is not considered as attempt. Yeah, correct. That is true. That is true. That means you're planning. Okay. All right. Now let's go for second case. Second is again an independent case. Let's review the second case now. Now tell sir, they're saying second independent case. They're saying software ka fair value is not measurable. Okay. Whereas license is transacted by another company at 4 lakh 90,000. That means indirectly they're telling license ka fair value is how much? 490. So second is a case where software ka fair value you cannot find, but license ka fair value is given to be 490. Again this entry. Tell me the entry. Make me happy. Which is coming in software. So first finish the entry. If you're confused with the amount we'll figure it out later. So software we will debit. What will we credit? The asset which is going out. The asset which we are going out, we need to cancel. Cancellation of asset will always be done at what amount? Carrying amount. Carrying amount is still how much? 5 lakh. Okay. Now software we have to debit. Since the transaction has commercial substance and fair value is also determinable, can we ignore fair value or consider? Consider. Now the question is software has to be debited at fair value. Which asset ka fair value will use? First priority for fair value of the asset given up. Okay, which is license. License ka fair value is missing here or given? Given. Now in this case, they're saying license ka fair value is how much? 490. So software will be debited at what value? 490. Is the journal entry matching or balancing figure? Balancing figure. How much balancing figure? 10,000. What will you debit that balancing figure? SPL. This is a loss due to exchange arrived as a balancing figure. This is the second case ka entry. Can I move on to the third case? Okay. Third case, they are saying neither fair value of the software nor fair value of the license can be measured. They're saying both the assets ka fair value you cannot find out. Sir, if you cannot find out fair value, though the transaction has commercial substance, but can you find out fair value or you cannot? Since you cannot find out fair value, what will we use? We will use the book value or carrying amount. Now tell me the entry. Which asset came in? Software. So software you will debit. Which asset went out? License. License went out, so you have to cancel the license. License ka cancellation will happen at a carrying amount of 5 lakh. Since fair value is not determinable for both assets, license or software also will be debited at what value? 5 lakh only. Again in third case, gain or loss due to exchange will not arise. That's all. This is the entry in the books of Sun. Same entry you have to do it in the books of Earth. Ulta, that's it. If you're updating, I'll wait. Or if you're through, then I can go ahead and finish it for Earth. Can I do it or any updation of happening? Nothing. Okay, now let's do it for Earth. From Earth perspective, you need to think. First, let's always put it up which asset is coming in and which asset is going out. Now let's read this line once again. Sun acquired software from Earth in exchange for telecommunication license. I mean, Sun has acquired software from Earth means Earth has given up what? Earth has given up software. What have they acquired? License. That means for Earth, which asset is coming in? License is coming in. Which asset is going out? Software is going out. Ulta basically. Okay, this is the scenario. Yes. Tell me the journal entry, sir. License is coming in, software is going out. So what entry Earth Limited will pass? Earth Limited will pass the entry as license account debit, and they will credit what? Software account. Software is going out means can they show the software in their books or cancel? Cancellation of assets will always be done at carrying amount or book value. Check. Do you know software ka carrying amount? Yes, software is carried in the books of Earth at what value? 10,000. Means software will be credited to the extent of 10,000. All right. Now the only question is license you need to debit. Now first case in first case fair value missing or fair value given? Fair value is given. Okay. So I mean obviously transaction also is what? Lacking or having commercial substance. Since transaction also has commercial substance, fair value is also determinable. License compulsorily we have to use what? Asset coming in we have to compulsorily record it fair value. Which fair value? Asset coming in or going out, whichever you can find out more clearly. But for exam, we will take a first priority what? Fair value of the asset going out. Which is going out? Software. Do you know fair value of the software? Yes, they've given you the fair value of software. How much? 5,20,000. So license will be debited to the extent of 5,20,000. Yes, sir. Entry matching or balancing figure? How much balancing figure? 5,10,000 credit side. That will be transferred to SPL, arrived as a balancing figure. That's done, G. Okay, in second case also they've just changed the scenario, but entry will be same. License will be debited and what will be credited? Software will be credited. Software ka cancellation will always happen at carrying amount. What is the carrying amount of software? 10,000. This is the entry in the second case. Yes, people. Okay, what is the second case? Again, we will read. In the second case, they're saying fair value of the software is not measurable, but license ka fair value given it to be foreign. So one asset ka fair value if you don't know, then compulsorily we have to use the other asset. So in this case, we will debit license to what extent? 4,90,000 because that's the only asset whose fair value is available. So entry matching or balancing figure? 4,80,000 is balancing figure that you will transfer it to SPL. Gain on exchange. If you're crediting SPL, obviously it's a gain. This is a gain on exchange. If you're debiting SPL, then it will be a case of loss on exchange. Sometimes they can give you the scenario and ask that as an MCQ question. Due to this transaction, what is the gain on exchange? Or they can say, they can give the option like 4,80,000 gain, 4,80,000 loss. Like that also you can give. So always be comfortable with what? Whether it's a gain or loss also. All right, third case, transaction is still the same. License is coming in, so debit it. Software is going out, so credit it. You're cancelling software, so cancellation again will happen at carrying amount. Third case, what did they say? Fair value of both the assets you cannot find out. If you cannot find out fair value, then their only option is to record the license at what value? Carrying amount, which is 10,000. So in the third case also, will there be any gain or loss or no gain or loss? No gain or loss. This is the entry under this scenario. I hope with this question, the exchange concept is clear for everybody. Okay, good. That's the reason I've just kept this as an LDR. This is a good question to just review that exchange concept. Yeah, I think, yes, next is a different concept that we will take it up after the break. So let's take about 15 minutes break and then we will resume with the remaining concepts. Thank you. I didn't hear it. Transaction has commercial substance. You have not watched the video, I think, no? First few days ka? Not yet. Okay. Commercial substance means due to transaction, cash flow will change. Cash flow will change. Now, if a company is using license, they'll get some benefit. By using software, will they get the same benefit or different benefits? Different benefits. That means cash flow is changing. If cash flow is changing, we say transaction has commercial substance. If cash flow is changing, we say transaction has commercial substance. If cash flow does not change, then we say transaction lacks commercial substance. That's all in the simple terms. Okay, same thing. Maybe you just watch that first 2 days ka video. You have not given the access yet, huh? Have you checked?
No, I got.
Then just check that once again. But now is it okay? All right. Come back in 15 minutes.